Trading is a scheme for slow enrichment, and you might be thinking, what's the point of being a trader then? I want to make money quickly so I can quit my job. I've heard of traders who take a few $1,000s and turn them into millions. Yes, friends, it's all possible, but behind the entire process lies immense experience, many sleepless nights, knowledge, and strong psychology. Today, let me demonstrate all these stages to you using my own example, and you will understand whether you can achieve any results in the market yourself. I'm sure that after watching this video, everything will definitely fall into place in your mind. Some knowledge base that will help you confidently enter the market. Let's go. Well, friends, comrades, I'm starting to record my trading session. This is my 8th attempt at acceleration today. I started with the euro-dollar currency pair. Let's break it down a bit. The fundamental factors that influence the overall movement of this currency pair, and then we'll open our first in this series of contracts. Obviously, the price has now bounced off the minimum where there is a good level of support. Why is it considered good? Because the rebound was quite strong and prolonged. This is evident from the volume of green candles, right here. I now assume that the strength has slightly waned and a correction is starting again on the euro-dollar. The resistance level, let's say, where there will be a slight consolidation. Usually, a pressure zone generally forms in the gaps between candles. And the larger these candles are, the stronger these levels will be. Our level is located right here. There has already been a reaction to it. Here, it's worth analyzing the candles, as it's unclear whether these barriers will be broken or not. That is, it's important to pay attention to the movement of the candles and their shadows. If you look at the final shape of the chart, it becomes obvious that the trend wants to break out of this wedge. I think it will break out in that direction. Let's see if I'm right, and we'll open the first trade for an increase. Right here, look, we have a large lower candle. It seems to me that it is pushing the price up, and this level will serve as a support level for us. In this case, there will be an upward price reaction from it, and consequently an exit from the correction zone upwards as well. So as you can see from the shadows, buyers still dominate the market for now. I, my friends, remember my first trading system, and it was a strategy, or rather a system of return to the mean. Moreover, if you buy when the price is at the lower band and sell when it is at the upper band. The first few trades I made were profitable, but then losses started to occur. I decided that this trading strategy, the system, wasn't working. Then I switched to harmonic patterns, probably spent half a year drawing these patterns. Initially, I had another series of profitable trades, but gradually the losses increased. I lost all my profits, as well as my deposit. So great, our first contract closes with a small deviation in profit. And my friends, at the moment when I had many losses again, I told myself, this trading strategy doesn't work. I need to try something new. Something new. This led me into the world. Trading by price action, support and resistance levels, candlestick patterns, and so on. Basically how I trade now, almost always. And by and large, the same scenario repeats. I have profitable trades, I have losing trades. And in the end, I abandoned this trading strategy. Look, the price is still consolidating and probably looking for a way out of the wedge, I say again. I think that in the area we will see a breakout. So one day I asked myself, why does the same thing always happen? Why don't I achieve consistency in my trading? There is always a series of profitable trades, and then losses accumulate and accordingly take everything away. You know what I realized, my friends? The problem was with me. I was switching from one trading strategy to another because my actions were inconsistent. And since that was the case, I was getting quite contradictory results. In general, don't make my mistakes. Now I'll tell you exactly what I mean. If you want to achieve stable results from trading, you must adhere to it without fail. Consistency in your actions is very important, especially in trading. This is what it's all about. You could say it's our foundation. Stick to one trading strategy, master it, and only then move on. Another contract I'm doing well, got into the swing of things with the first two trades, so to speak, revived my brain. Friends, today, once again, as you can see, we're gaining momentum. Right now, the situation on the euro-dollar is developing. Also favorable, in my opinion, for entering a long position. The price continues to gain momentum, to break out of the wedge. And we can continue. Let me open a new contract. Great. Right now, an excellent situation is forming. Volatility is starting to increase. And the speed of candle movement is also beginning to rise in the direction of growth. This is definitely a plus, meaning the price growth phase is starting to manifest. Earlier, there were 2 green candles visible. Also, the lower shadows are not supported by the overall bullish energy we have, and they have also overcome the limits of the lower zone, the pressure that was pushing back our chart. Excellent. Friends, for active earnings, your trading strategy must have an advantage, and you must be consistent in your actions. What is an advantage? Now, I will tell you what an advantage is. In my understanding, it means that your trading should yield a positive statistical result in the long term. If this does not happen, then no consistency will help you, because in the end, you will simply lose. Don't believe me? Well, look, if you pay attention to beginners, to the approach to trading among beginners, it all somewhat resembles a game in a casino, where the entire outcome depends on lady luck. Do you agree with me? Well, most beginners do exactly that. In general, what I'm saying is that it's always worth having an advantage over the market, at least somehow, yes, and sticking to a clear sequence of your actions. And all of this about everything. I talk about this on my Telegram channel, which is open to each of you. All the information is available, completely free of charge, so be sure to check out my etc. Subscribe DAOs, and you will be able to develop your basic market analysis. Learn to find the best places and entry points. I constantly provide you with signals there, but not just signals, meaning they are not just dry signals. It's also analysis from me, so you can also try participating in my marathons. Friends, in short, without further ado, just subscribe to the Telegram channel. There's a lot of useful information for you and everything in principle. All marathons take place every week at 6 p.m. Moscow time, and there are also open trading sessions on Sundays. I am always open to collaboration if you have any questions about working with me. To personally participate in the premium channel, just go to Telegram and we will arrange everything with you. In the meantime, I will probably continue trading on this currency pair, euro-dollar. I generally like the breakout from the consolidation zone, so I am also going long. Volatility has started to increase significantly. And isn't this a reason to continue the trading session? Look, the entire resistance zone, which was formed earlier, has been broken through. And I think it can now become a support level for us. Look, about the advantages in the markets. About the advantages, because without an advantage, no consistency, no risk management will help you. How can you even know if you have an advantage? Look, that's a good question. You cannot say if you have an advantage based on analytics, chart analysis, on risk management or psychology. Instead, you must be able to quantify your advantage. What do I mean? I understand that I'm speaking a bit in complex terms right now, but just try to understand me. This is very important. It's very important. Let's wait for all the links and the completion of the deal. Yes, a perfectly excellent level. And I'm just planning to open another trade on this currency pair. Here, it's possible that the price will reach another pressure area. That is a resistance level for us when increasing too. So, if we rely on competent technical analysis, it can be determined earlier. I just already looked at this chart, see what we do to correctly identify resistance zones. We draw horizontal lines at the most key points in the chart's history. Like this, like this, like this. This is very convenient. Look, if the price breaks one, we have a second and even a third. Let's add them. When we distribute all these levels, approximately where they are located, we start waiting for the candle to touch one of the levels. And in fact, we are already seeing a correction, a reaction from this level. Great, I'll go short. Let's see. This entire area will influence the further trend because traders were building their positions in it. And now there will be a reaction precisely because of this. That is, from a psychological standpoint, even this area will have an impact on the future moment when the price reaches these levels. Most traders will potentially view this zone as a barrier and will offload from it, expecting a correction. 100% I'm going with the majority. In this case, I continue to trade short. So, okay, what needs to be done to find out if you have an advantage? You need to ask yourself a few questions. Do you have a working trading strategy? And do you understand the signals on which you enter a trade and why? Successful traders always know what they are doing. and they always know their entry and exit points. Before switching to a real account, be sure to test your strategy on a demo account to ensure its effectiveness. Your trades should be calculated overall, so that a single mistake could in no way destroy your deposit. Do you analyze your results as well? Do you keep statistics? If yes, what is your percentage of successful trades? If not, it's time to start doing it, guys. So, if you focus on this and can freely answer these questions, then you have an advantage. That's what I meant. That's how an advantage is calculated, in my opinion, guys, in my opinion. So, what do we see? We see that there is a pullback from the resistance level. We made a profit on the last trade, by the way, which is great. There is another trick, or rather manipulation by the market. The bull trend, having broken through the level, subjugates it. That is, as we can see, there will now be a reaction. Again, towards growth. The price has settled exactly above the level. This is even visible from the closed candle, which in turn resembles a hammer pattern. From here, there is a reaction downwards. This is a normal reaction. It's a correction. But look at the large volume of this candle. And here is the level that will now serve as a support level for us. At the moment, there is a rebound again. And it is a very good one. Even if the level pushes the price back again, I don't think it will go below my position. Initially, my contract is, in general, in a quite advantageous place. This is the key to success in minute trading. Wait, for the most optimal entry points. Look, that is first and foremost, keep an eye on the price. You don't have time to process a huge amount of data, conduct fundamental analysis, or determine the key market drivers. But how do you know in which direction the market will go? It turns out there is a simple solution in this regard. You just need to follow the price. In other words, look at the chart and ask yourself if the price is moving up or down. If the price is rising, look for an opportunity to buy. If it is decreasing, look for an opportunity to sell. As you can see, at the moment the price is rising. So we will look for an opportunity. In the long term, for buying, everything logically follows the trends. You might be wondering what to do if the price is moving up, but the fundamentals remain bearish. You shouldn't buy or sell, so what to do now? I will be working through just such a situation. In short, you see that the candles have already touched the second resistance level. The closer the contract is to the level, the better. The better for me because there might be a stronger correction. In general, based on my experience, it is more advantageous to follow the price, regardless of the fundamentals, if you are trading on the minute chart. Why? When the market goes up on bad news, it is likely because the market is already in an uptrend, and the bad news wasn't strong enough to have an effect on the market and to initiate a correction or reversal. So, always focus solely on the price. Different markets behave differently. If you have read books on technical analysis, most of them tell you about market trends in 30% of cases. But recently I found that this is not quite the case. In fact, some markets have a stronger trend than others. Let me prove this to you. I applied a simple trend-following strategy to different markets. Basing my actions on levels, I simply executed my contracts and ignored the overall news flow. Most likely, even if there is some influence in trading, it won't be on the minute. For me, it won't be colossal, it won't be critical. Guys, 49.82. Guys, 49.82 dollars. We had a strong deviation from the pressure zone, very strong, I would say. We see that at this level, there are many positions of market participants. I think a small reversal is forming here of the trend. And it can be understood for two reasons. The first reason, let me open it up completely, the contract. Look, here's what you need to do when such a situation occurs. A large red candle engulfs the previous movement, thereby nullifying its influence on the future. Formation of the trend nullifies all of this. It is also evident that the influence from resistance levels are still present. That is why the energy point also remains, which may push the price a bit lower. So my friends, the lesson is this. Different markets behave differently. If you know the market behavior, you can increase the statistical odds in your favor. The Holy Grail does not exist. Why? It's simple. Any trading strategy is designed to profit from a specific market pattern, it is not suitable for all types of markets. The market is always changing. It can shift from an uptrend to a downtrend, from a range. Consolidation to breakout. Tense moment, friends. This will be my last trade for today. And up to 7,132 guys, 6th attempt at acceleration. This is a fantastic result. So all this means that a trading strategy can only profit under certain market conditions, nowhere else, before it transitions to a drawdown with changing market conditions. In general, trend indicators make money in trending markets, but they fall into a drawdown when the market enters consolidation. Do you understand? If you agree with what I just said, then stop searching for the Holy Grail and simply move on to endless practice. And I'm wrapping up trading for today. It was a wonderful trading session, friends. I have boosted my deposit once again. Now let's summarize. So my friends, the good news is that you don't need a Holy Grail to consistently earn from trading. All you need is a trading edge and consistency in your actions. As a trader, you will regularly incur losses. That's normal, but with proper risk management, you can keep these losses in check until they feel like an ant bite, you understand? So friends, I was very glad to trade with you today, to show you my trading day. Give a like if you enjoyed the video and click the bell. Your support is always appreciated. It inspires me and is pleasing to the eye. Also, subscribe to my YouTube channel and my Telegram channel. Links are provided in the description of this video. See you in new analyses. Wishing you lots of kindness, peace above your head, and profit. See you soon on my channel. Goodbye, everyone.